All right, good morning. Welcome back here to Trader Nick. Great to have you aboard. Want to go out, take a look at the market, and take a look at the challenge, and talk about the challenge in this week and my thought process behind trades, or in some cases lack of trades, because of the way the week has unfolded here. And let's start out with the challenge, and we'll go from there, and then take a look at the market a little bit closer. On Friday, we had taken off. Well, here, let me pull it over here. Let's see if I can pull this over to this screen. Maybe. There we go. So on Friday, we had pulled off the Microsoft puts, and that was. That was a kind of a tough decision because there was part of me that wanted to let it run, but from a risk reward standpoint, it made 0 sense to hold on to it. So I had to move on and take it with the value that was there. And then as the market got towards the close, it started rallying back. And, I thought, do I want to go in the weekend with no exposure? Or do I want to take a little bit of a chance and see if we can't start to push things here a little bit, knowing that if there were follow through to the selling in the market, it wouldn't take a big position to do a heck of a whole lot. Right. And so I went with Apple, part of it because of the chart. Mostly, though, because it would be a little more market-driven, right? And, I didn't like the price of the market. And you can see it still had a ways to go to get to the lower Bollinger Band. Now, ultimately, it never got there, right? And it rallied into the close on Friday. Okay, everything did fine. And then woke up Monday morning and it was upgraded. And it was upgraded, gapped above the 7. I looked at it. The value left in the option, I think there was like $150 at that time. And then an hour or two later, it was like $80. And I just said, you know what? At this point, I could take it. But, if the market does do something crazy in reverse, and I even got on video, talked about it, me holding it wasn't saying, hey, I expect Apple to turn around. It was just, hey, if something crazy happens this week and drops, all right, fine. Basically ate away at my my Microsoft gains there, but took that shot, took that chance, and that's what I look at the challenge as being about. Normally I like to have a few more gains before taking some shots like this, but I was a little eager, and I would do it again. With that same setup, I would do it again. Because the norm is not for it to do what it's done here this week, given what the metrics are. We've seen some very abnormal out there in the market this week. Not necessarily from Apple. We see this type of price action, upgraded. I think Apple has now caught 4 upgrades on the week. This morning caught another one, so I believe that makes 4 different upgrades on the week. So pretty powerful here and running in that upper Bollinger Band, and no sign of slowing. It's a absolute freight train. But those will expire worthless here on me. And okay, great. Moving on. And then I'm watching things Monday, and things are going higher. Watching things on Tuesday, and I get some stocks that kind of get into some areas that I go, you know what? I think I can short them here and ultimately make money. I'm just not sure when that will be. For example, a Halliburton, right? You know what? Tuesday, yeah, could I short this and ultimately make money? Yeah, probably. But it may be a while. Right? It may be a while. It may take some time to chop on through things, and with the market looking the way that it is, starting to push back up, erasing the bearish signal on the MarketVibe, how much exposure do I want? And I said, I'm going to try to be as patient as I can, looking for, those opportunities. I did go price out some of the upside stuff, but it all felt chasey, and, ultimately it wouldn't have been, right? Buying Microsoft at 113 wouldn't be really chasing after, today. But I wasn't willing to, I didn't step in, wasn't willing to. We talked about the bullish case, and hey, you could buy these, with a stop on the low from the prior day, and as long as that holds, path of least resistance is higher. And, I've kind of taken that methodology and said, hey, you know what, I'll apply that to looking to get in on the downside. And, just haven't had any of those signals really come into play. Now, we did have, some Home Depot, which, which was trading on up. And I did decide, hey, I'm going to go and step in here. And yeah, it wasn't trading below the low of the prior day or anything like that. And I knew I was taking a little bit of a risk. But on the hourly chart, I got the breakdown of the 7-hour. And I just used that as my entry point and said, okay, you know what, I'll use that to go jump in. Got a little longer time period on the options so that, if I was wrong in the short run, there's time to wait it out a little bit, but, also not a huge delta here for it. 1 second. All right, my apologies. So I set up a quasi-conservative option play with it. It's not super conservative, but, I kept, $1,500 in cash for the challenge and, put the rest here into Home Depot and decided to run with that. And, here throughout the week, we've seen, things like U.S. Steel, give a bear signal here yesterday. Oh, man, do I really want to jump in right here? Do I really want to get this? Do I want to add that exposure given what the overall market's doing? Because the overall market is blitzing on higher. And yes, the market internals, as we'll go and look, they've improved a little bit, but they're nowhere near as strong as they were 3 weeks ago. Right? So, all right, here's a Nike. Okay. And I watched Nike even this morning reverse, big bad reversal on it. All right, reversing at the same level that it reversed back here twice on. No, there's just no real weakness in the market, and then you see, Nike right back up. Oil, a little bit of a breakout in oil. Okay, is it going to fail on that breakout? Gaps on down this morning. All right, you know what? Is this going to fail? Just watching it all morning. Tick, 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 tick. All to the upside. So, is it the environment that I want to add more exposure? No, it's not. I decided to hold Home Depot. I thought about pulling it off this morning, but, they're really, when it really comes down to it, if you look at what Home Depot was this morning, especially when it's down here at 180, there's a big, bad, bearish, engulfing candle. And this is the second bearish engulfing in 2 days. You look at the patterns on those, that tends to be a very, very bearish pattern. So I said to myself, you know what, I'm going to hold this because I will not be able to forgive myself for getting out on that pattern and then seeing Home Depot run down to 174. I just wasn't willing to do that. And knowing, hey, you know what, market's bullish. It may take it on back here today. And it ultimately has. It's taken it on back a little bit here today. But nothing that I look at and go, wow, this is uber bullish. But we'll see how it closes. Most likely I'll go into the close here, with Home Depot. If you look at the hourly chart, you can see it right back up here to 182. I'd love to see it break back down, below about 180, 140 by the close. But I don't think that's going to matter, all too much, right? All too much there. But, so that's the given everything that's out there right now, Going into the weekend, that's probably how I will play this, in terms of, hey, I'll hold Home Depot and, hold the cash that I have waiting for, the entry points here to set up. When we look at the overall market, we're talking about an SPY that is now as far away from the 7-day moving average as it was on Friday of last week, only on the other side. This has been a monster rally in the course of 5 days, and one that when we see this type of rally off of lows, it can be sustained and pushed on higher. Generally, when it's not off of lows, it's not. To me, this rally feels like fund manager chasing. I talked about on Monday that after Monday's action, Tuesday we'd gap up. The shorts are going to get squeezed. They'd have to get squeezed here. We'll see how that plays out. We saw the shorts get squeezed, and it really has just kind of looked like fund managers pushing in, being forced to push in here, since. And as gone Apple, so has gone the market. As has gone tech, so has gone the market, here this week. So, it's getting a little far from that 7. I wouldn't be surprised to see a Monday reversal, here. But I think there's something very, very noteworthy, and I think it's something we're going to see a lot more going forward. Job reversal Fridays. Forget about the number. Forget about whether the market is, what it all, means economically and everything else. But if we sell off into the jobs number and the jobs number comes out poor, market's going higher. And if we rally into a jobs number and the jobs number comes out great, market's going lower. And I know that doesn't make any real sense in terms of, the whys and, why that would be. And you can't make a huge, very logical, piece there with that. But we have just seen that over the years. It's gone away here a little bit of late. We saw it very much here this Friday, and I would not be surprised if that continues going forward for a number of reasons that I'm not going to expand on right here, but next time we get to the jobs report, I will talk about, some of the whys of that in the past and, why I think it'll be that way, here in the future. So, as far as the challenge, that's where I'm at. I'm willing to be a little bit patient, for my downside signals. We've seen how fast the options can move on the puts, and, they can move very, very quickly, both for and against, right? So, you generally with calls, you don't get that quick of movement. So I'll continue to kind of take this with a put approach. It doesn't mean I'm not looking for some call opportunities and not, pricing them out or not willing to pull the trigger on a few if they're set up. But for me, they just have to be set up, pretty darn perfectly. So anyway, that's the thoughts on the challenge, where it's at. I believe what the challenge is at, assuming Home Depot is a wash right here, which it probably is close to a wash. Let's see here. I'll look exactly. No, I'm down $50 on it. Okay, so I'm down $50. So the challenge is at 2,700. Cash available at 1,500, where it sits right now. So, it went down quite a bit after the first two trades. Was kind of stuck in that lower zone, that kind of 1,300 to 1,800 area. We got it pop back up over 3,000 at the end of last week. And we've drifted down just a little bit here, here on this week. So, we'll be looking to get that, that next pop back up, put us in the green, and, let us trade from the green going forward. It would be a much nicer position overall. But that's where things are. Now, the overall market vibe here today is a 5. Last I looked, it's still a neutral. And let's go take a look at why. Because we've seen the market go to new highs. But the market vibe is nowhere near what it was when the market was lower 3 weeks ago. Right? And this is something that we see happen from time to time with the internals. It's commonplace, to see, and you generally don't top out fully on a 9 or 10. If we go back and look at the data, but here we are with a market vibe of 5. What's that mean? It means the bulls have control of the majority of the metrics, but the reading is neutral because we're not talking about heavy new accumulation by the bulls. The bulls aren't going and grabbing new areas here of late, right? They're not grabbing new stuff. Let's go take a look at some of the stuff that goes into it, and we can see it. Let's start with let's just start with a little performance and just look at small cap versus large cap performance, right? Which is a basis here, and you can see that over the last 30 days, the SPY is up 3.14%. Small caps are up 1.2%. This is almost a 2% differential. Negative 2% differential. This is not only not in bullish territory, it's fractions from being in bearish territory. This element about this week is pretty startling. Now you can say, well, how much is the Boeing effect and all of that? Well, we can see the Boeing effect a little bit more if we put in the Dow, the diamonds, the DIA, right? And you can see that the Dow is sunk a little bit. The Dow is, not performing up with the S&P like it normally does. But even with Boeing, the Dow is only barely outperforming, the Dow is still outperforming the IWM over the last 30 days. We have some small cap lagging that has really started to come into the market. This is one of the first things you tend to see as a market is topping out, and that's what we are seeing here with the IWM in a way that we haven't seen since last October, October of last year. All right, so it needs to be a 2% differential to be bearish, so it's still in a neutral mode, but man, it's getting very close to that bearish mode here with the performance, the cap performance that we're seeing out there. We can also look at things like the emerging markets versus the SPY, and you can see the S&P is outperforming the emerging markets. The S&P is outperforming the FXI. The FXI slightly outperforming the SPY. Yesterday it was opposite, but they're right close. Normally, when we're talking about a big bad bullish market, we're talking about the FXI and the EEM being big leaders, not laggards or equal performers like the FXI is here. So that's one area. Another area, the bullish percent index, and we've looked at this. Bullish percent index has triggered a bearish signal last week. And you can see that, yes, the market's gone up every single day this week. It's been a big week for the market. Bullish percent index has barely nudged higher. What's that telling us? That's telling us that we're not seeing new stocks triggering bullish signals on point and figure charts. That's what it's telling us. And so we had a bunch of bearish signals come in last week. And this week, no new bullish signals. Even those bearish signals aren't getting erased. So the bullish percent index is still in bearish territory. Still in that bear territory, here overall. Now, the flatness of it, is abnormal in bearish style markets. Normally, you do not see a flat bullish percent index. The only time you see this many flat days in the bullish percent index is on an upside market, right? So, that is something to take into account. But we see that with the bullish percent index. Volume flows, right? We looked at these last week, and let's go look at them here again. And we'll take the cumulative here of the NYAD. And let's just come to year to date. And we'll go back to last year. let's get the NYUD in here. And this is basically taking and saying, okay, what's the upside volume versus the downside volume? This is one of the areas that has really changed this week. You can see that last week, and we talked about it in this envelope, that when it's in between these envelopes, it's a neutral. When it's below this envelope, in these two, between these two, it's bearish. When it's between the high and this upper one, it's bullish. This is back into bullish territory. This is one of the areas that the bulls have recaptured here this week in terms of this volume dynamic, right? It was one that the bears captured last week. And normally you don't see quick turnarounds in this like what we saw this week, but we have seen it. We have absolutely seen it. It's been a very fast turnaround. This is one of the areas where, you say, well, Jeff, you're showing the small cap versus large caps and the bullish percent index, and, those have a little more of a bearish feel to them. Well, this doesn't. This is where, the bulls are, keeping up and, actually, taking a piece of, of the market vibe and, pushing it on higher here, right? So a very bullish piece there with the NYUD. If we come in here and do the NASDAQ, right? The NASDAQ, the NAUD, so it's the same concept only with the NASDAQ. You can see that last week it didn't go bearish. And this week it's just barely nudging bullish. So a little bit of a different picture, a much stronger picture from the NASDAQ than from the S&P. All right. Now, last thing I want to show you in terms of the internals, there's a million different data points we can look at, but let's just look at the number of stocks trading above the 7-day moving average. 414. It's a big number, 82%. That's a big number here, and this is what we tend to see when a new bull signal happens in the market vibe, and when the market vibe's incredibly overbought. That's when we see a number of this magnitude. It's a very strong number. It's a number that I'm not reading anything of, as it's just another number in the midst of other numbers. But this is a number that if it drops off fast, let's just say by Tuesday next week, it's at 200. Man, I mean, buy puts on any and everything, and you'll be fine. But that's if that happens. Right now, where it sits, bullish advantage. And strong bullish advantage. Number of stocks trading above the 20-day moving average. If you look 320, so about 64%, trading above the 20. That's just a very healthy number. It's not too hot, not too cold. Just squarely bullish number. Very typical of bullish runs to see it right in this area. So definitely in the bulls' favor there. One more thing I'll show you here. Last thing in terms of bull bear sector. But if we just go and look at the last week and what's moving, right, and how it's moving, you look at who the big winner is. It's tech. Next is healthcare. Next is energy, financials. Get down here to the bottom. Industrials and materials lagging here on the week in a big way. Industrials. I'm not willing to say that this means a hill of beans. Why? Because this is the Boeing effect. You take Boeing out of here, and it's industrials are performing right up with healthcare and energy, right? So it's this data skewed a little bit. Materials big laggard on the week. Utilities. This is generally a bullish set. This is generally a bullish picture here for the action on the week. And I think that's very noteworthy. And it's one of the reasons why I can't just say, hey, you know what, I'm going to go buy puts on everything that rallied this week because, man, it's just going to go back down. I can't with this type of stack. We look over the last month, we still have technology on top, but then we have utilities, right? We have industrials on the bottom, healthcare on the bottom, consumer discretionary, energy all on the bottom. The last month is nowhere near as healthy. The last month is actually showing some, pretty negative divergences and, kind of suggesting that we've seen a tech chase and fund managers having to chase in with tech into this market to try to play catch up on the overall market performance, which is, what I think we see a lot of what's happening out there. But that's not necessarily bearish, right? That's money coming into the market, and that money's not going to leave the market unless it's spooked out for one reason or another. So, that's where the market vibe sits. It's neutral, but bulls have more advantages than the bears right here. It's sitting at a 5. What would it take to go bullish? It would have to move to a 6 by Monday. That's all it would take is a 6 by Monday. To go bearish, it would have to go to a 2 by Monday. So that's what it would take here with the bullish percent index. All right. So anyway, that's where things are sitting. Here, that's kind of my thoughts on the challenge and some of the trades that are out there. And again, most likely I'll go into the close here today with Home Depot. I'll price some other stuff out. Take a look at a few other things here. But most likely I'll go into the weekend with Home Depot and then to look to put the rest of my cash into play on some downside signals or on Pepsi if and when it breaks 115.40. Thanks for hopping on. We'll talk to you later. Take care.